You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 3 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That funky tune means it's time for the final program of our broadcast week here on the Options Insider Radio Network. Yes, it's time for TWIFO. This Week in Futures Options, a program where, as the name implies, we break down all the hot action in the world of futures options. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Quite a few programs for you guys to digest over there on the network, including many great archive episodes of this fine program, TWIFO. Of course, the easiest place to find it, the mothership, theoptionsinsider.com, or via your platform of choice, iTunes, TuneIn, Stitcher, so on and so forth. Also via the mobile app. And of course, if you can make it, we stream a little earlier now, 1:30 p.m. Central, 2:30 p.m. Eastern. So we love to see you guys in the old chat room there as well, if you can make it, for ask us questions, your comments, your insights you can share with us, as well as with your fellow TWIFO listeners. And I am joined on the old TWIFO program, as always, by my volatility compatriot and TWIFO partner in crime, and in the studio for a change, which is a nice break, Mr. Nick Howard, the founder of a little platform we like to use around here called QuickStrike. Mr. Nick, welcome back to This Week in Futures Options, sir.
Here we go again. Another week's gone by, ready to go.
Ready to go. You got double duty this week, sir, because you're holding down the QuickStrike seat. You're also holding down the CME Group hot seat, so you got double duty. So are you ready for some TWIFO action, sir?
I'm straddling two seats physically
you got two seats right here in the studio. I like it. All right, with the team assembled, with the gang all here, we're going to dive right on in. Mr. Nick, since you're doing double duty, I'll allow you to spin the wheel and say which product you want to parlay on first and analyze first. So what's floating your boat? What really caught your eye in this week's activity? Past weeks, of course, we hit Brent WTI to start off. We like WTI. We, of course, like gold. There's some other products some people have been writing in about. We'll get to those, too. But what really piques your curiosity? Where do you want to start off this week, Mr. Nick?
Well, I think just to kind of wrap some stuff up, or if the story can keep going, we might as well look at the WTI-Brent spread again, just to get an idea of what's going on.
I'm not familiar with that. What are you talking about?
Oh, yep. That's a spread between the WTI and the Brent crude oil products. We've been talking about it for the last few weeks, so we might as well kind of follow up, especially as the volume continues to lead to higher open interest. So again, sort of in a nutshell, just sort of from the 30,000-foot view. Again, in comparison to our other products that we talk about, the open interest right now is about 150,000. But like we mentioned, every week we seem to be breaking a record. So this week we're up again 6% in this contract. So I'm sure that's exciting for the exchange to see that kind of activity in something that prior to this was not seeing too much happen. Also out there, we can start to see trade in the parity plus strikes again, and we see them this week move in a little bit further. So out in the December 17 contract, we saw an increase in open interest on the 1.5 to plus 1.5 strike by about 1,500, with more trading today still. And we got some other negative spreads trading out there as well, minus 150 and the plus 150 both traded. But it's good to see the continued activity and we'll call it the continued bullishness of that spread, bullish being the WTI catching the Brent. And that's in the early part of early for us in terms of what we've seen from this contract. That's in the December 17 contract. We also saw some good activity and some good change in open interest in the June 2018 contract. So here we saw increases of 2,500 in open interest for the plus 3 contract. We also saw open interest and openings in the plus 1 and the plus 2 out in the June. So again, good activity, increased expectation that this WTI is going to eclipse the Brent in terms of the price out there on from a year to 18-month range, and then we'll jump all the way out to the contract that really started it all out, the DC 2018. We saw some increased open interest in the plus 3, or the WTI plus 3 over the Brent. So we saw that up by a little bit, but also a new position in the minus 3. So there are a little bit of bearish player out there as well in this product. So again, to recap, continued increase in open interest, some decent volume. So an increase of 8,000 in open interest on volume of about 16 to 20,000 as we speak right now, and the parity play moving in on the curve a little bit. So we saw more activity up in this in December contract of this year, and in the June contract we didn't see any plus trades. We saw more minus trades, but really not much trade inside of the year and the year plus.
There's been a lot of debate about the Trump administration, pros, cons. In fact, just today, they're announcing some of their executive actions to try to roll back or mitigate some of Dodd-Frank. So there's a lot of pros and cons. Obviously, he's been driving a broad rally in the market for the better part of the last few months. So you can take both sides. There's one thing that's kind of indisputable, though, that Trump has certainly breathed new life into this WTI-Brent spread. I mean, we never even talked about it before this talk started happening. So I guess, obviously, it depends what side of the spread you were on, whether you're a fan of his right now or not, but still, I guess it's kind of hard to argue, Nick, that at the very least he's jump-started this product to a whole new level. Would you agree?
Oh yeah, I mean, just the whole tax talk, it really kind of pushed it to where it started to trade again, and there was pre-trade prior to that tax talk, I think, as well. So there were some people in the know that were making some bets, and then that conversation sort of pushed that spread to even have more volume and more increases. So it's just fun to watch. It's fun to be able to shoot around and watch the different products as well, and especially when we're talking about a benchmark in one place versus a benchmark in another. It brings the whole market together, and I think it's going to continue to be something that we'll get some mileage out of from shows to come.
Since we're talking WTI Brent, let's segue on over to one half of that equation, which is the WTI side. I know a lot of our listeners like to play in that neck of the woods. If any of the Top Step folks are floating around out there, welcome. I know you guys like You guys like your crude, so we'll talk some crude. Don't worry. Another decent week. Seems like every week they're kind of growing open interest out there, Nick, which is kind of interesting. Up about 4.5% out there in the big mothership WTI over there at CME Group. By the way, I forgot to mention top of the show. You guys want to follow along live with all the stuff Nick and I are analyzing and talking about here? You can do just that. Head on over to cmegroup.com/TWIO, where our friends over there at CME Group provide to you a lot of what Nick's tools free of charge. So hit that page, and then you can go pick your product of choice. In this case, we're talking energy. Select WTI. You can follow along right there if you want to see what we're talking about right there. If you scroll into the market dashboard, you'll see the TWIO report. Or actually, if I'm correct, Nick, that page will actually automatically load the TWIO report, correct? On the cmegroup.com/TWIO page.
Yeah, so that
opens it, so you don't have to do anything.
So that's a direct link.
Forget about that. Don't worry about that. It does it for you. So it'll open that page for you. You can see exactly what Nick and I are looking at right now, just like we're doing here in WTI. So I mentioned 4.5% up in open interest. Not a bad week yet again. Kind of inexorably growing open interest week after week out there. Even though overall for the underlying, it was a net, not a huge week, up about a handle or so, kind of depending where you're looking out there in the term structure. Crude still hovering in that mid-50s range or so out there, kind of having a hard time breaking out of that. We have a question about that, I think, a little bit later. We'll get to that in a little bit. If you're saying to yourself, hey, what was the option that was leading the dance? Or maybe even before we get to that, let's talk all things crude vol, because that's been an interesting story. I think we have a listener question about that, too, so maybe we won't get too deep into it now. But crude vol still remains kind of in these doldrums here, Nick. I don't know. It needs a little shot in the arm, I think, to really kind of to spark to life. We saw a much higher volatility regime for crude oil for pretty much the entirety of 2016 until the last few months or so, I think you could say. So these days, crude has kind of set a new volatility regime, new volatility paradigm, and it's going to take something to shake it out. Again, we'll get to that more in a little bit. If you're asking, hey, what was leading the charge out there this week? Was it the calls? Was it the puts? It was the calls, and it was the double call. So pretty much the near at the money, near out of the money calls there, depending on where you're looking. And with about 40,000, just a tick under there for the week. Pretty aggressive week out there for those double calls, aka the 55 calls, including a big chunk going up yesterday, Nick, about 11,000, and a pretty decent clip going up today too, nearly 10,000. So about almost 21,000 of that 41,000 or 40,000 or so, roughly half going up yesterday and today. So some late end of the week love for some double calls. Some of that obviously impacted by the late rally out there in good old WTI. Then number two was a fairly distant number two. They've been a lot closer in recent weeks, Nick. There's been a lot more parity between the puts and the calls. This week, it was pretty much only half the volume going up in the 50 puts. It's been that really very tight risk reversal / strangle that's kind of been catching our eye for the last few weeks, the double calls and the 50 puts. And 50 puts losing this week, only 21, just a little, maybe 22, almost 22,000 contracts going up this week. The lion's share of those going up on Wednesday, about 7,000 and change. A good chunk of those closing, though, so bear that in mind when you're looking at this paper. Then after that, it kind of falls off again to the 52 puts with about 13,000 of those bad boys lighting it up. Then if you want to look a little bit farther, we do actually have a little bit of love beyond the March month there, Nick, even though 42, almost 43% of all the paper yet again was in the front month. Kind of just the way WTI seems to trade these days. Pretty much all front month all the time. No love for the weeklies. Still haven't cracked that puzzle as to why that is, but all front month all the time, 22% or so in the second month, which would be April, and there was the 850 puts also lighting it up this week to the tune of almost 12,000 contracts, but pretty much all of that, Nick, it wasn't like it was even trading throughout the week, all of that on Monday, about 9,000 of that 12,000 or so coming in that one day. So a nice rash of puts going up. A lot of them opening too on Monday. The rest of the week pretty quiet. So it looks like one big block trade out there on Monday in those April 50 puts. And we're looking at skew again. There wasn't a heck of a lot of skew evolution, but I don't think you really would expect some that this week. That said, Nick, I will toss it over to you for the quick skew breakdown, because that's where we see the rubber meeting the road out there in WTI land, as well as whatever else caught your eye this week in the hot WTI options, sir.
Yeah, so we'll, like you mentioned, we'll leave the volatility until we answer some listener questions. But if we're taking a look at the skew, and then we'll also kind of feather in the put-call ratio. So from a skew standpoint, really not much change from last week, and that's really not a surprise given the fact that the contract itself sort of trended sideways. We had a couple blips up and down in terms of maybe a little bit higher bounce through some higher prices early on in the week, but reality is we spent our time between the 50 and 55 strike, and if you look at it, the skew, you're not going to expect much to change there. I mean, it's still biased towards the puts with the negative value there if you're looking on the This Week in Options report. But I'm going to expect not much to happen there in terms of anything significant until we see something on the downside or the upside in terms of movement. And to sort of support that, if you go and take a look over on the right-hand side, again, as Mark mentioned, the primary bulk of the trading coming in the March contract as well as the April contract, right? We're going to see start some of that March volume move into the April volume. March has 12 days. April has 40 days. But if you look, and you're going to see the put-call ratios for the volume for this week is pretty much around 1. So again, there's trading back and forth, which means that there's people on both sides of the at-the-money at this point, and really sort of what we would expect again from a trending market. There's really not a lot of expectation one way or another from the trade standpoint. And the skew standpoint, we still have some bias, but I'm still thinking that people aren't really sure what's going to happen. Still looking for a breakout here, but we can look across all of the volume that we're talking about, and the big volume we're going to say is the rest of the year's contracts, and then the June and the December of next year. That's a 4% increase, as Mark mentioned, where the majority, almost 95% of that, it took place in those 10 months. So again, like we say all the time, trending markets kind of boring, but you're still seeing an increase OI, a pretty good volume, almost 600,000 this week, and still trading around the at-the-money, and still some decision or a lack of decision, you might say, in terms of what direction people think things are going to go.
Yeah, speaking of direction, we saw a clear direction this week out here in the good old shiny stuff, a.k.a. the gold. It's been people have been waiting for maybe the worm to turn, the gold bug out there to turn, depending on how you want to put it there, Nick. This name, gold's been beaten down quite a bit of late. Of course, towards the end of last year was that protracted, prolonged sell-off, and a lot of the gold bugs I know were wringing their hands and writing to us saying, what's the vol showing out there? What's the skew showing out there? When's this thing going to turn? Well, this week the gold bugs will be happy. Had a pretty nice move to the upside, about 25 to 30 handles. Again, depending on where you're looking out there on the old term structure. So a nice bounce back into the lower 1200s, 1220, 1225 or so. So breaking back out of that 1100 range would seem to, 11 to 1200 range would seem to be, I think, dogging the heels of a lot of the gold bugs. Gold vol also springing back to life a little bit. I'll let Nick get into this a little bit more when he does the quick skew breakdown in a little bit, but it seems like those calls getting a wee bit of love, reflecting some of that volatility, and of course, as you move up the skew, you're going to get a little bit of that juice feeding back into the vol, and that's exactly what we're seeing out there right now with gold vol. Getting a little bit of life after kind of being surprisingly in the doldrums, even though gold was kind of moving around a bit. Some people were actually writing into us saying, why is gold vol so cheap? Which, if you think that was an excellent time to maybe scoop some gold volatility. So bear that in mind when you're writing those letters to us about why is vol so cheap in product X. Looking at the week, it was also a pretty active week, about 5% increase in open interest, a little over 40,000 contracts increase, and about nearly half of that coming in the front month. So very short-term, short duration paper yet again out here in the big CME gold options. If you're saying to yourself, what was leading the charge? Well, 25 at 30 handle rally out there in the futures. Guess what? Calls were leading the dance. I know that surprises all of you, but it was the 12 half calls. So formerly pretty aggressively out of the money, now near out of the money calls with about 10,500 of those. Actually fairly evenly broken down throughout the week, Nick. It wasn't like it was one big chunk on Monday or Thursday or anything like that. It was kind of evenly broken out throughout the week. So just a steady diet of call love, a little bit lighter today maybe, but other than that, a pretty steady diet of call love pretty much throughout the week. So the 12 halves out there in March leading leading the dance. Then number 2, also on the call wing, a little bit more reasonable, a little bit less optimistic, Nick, the 12 quarters, the 1225 calls with about 6,300 contracts coming in at number 2. Again, well, that one, about half of it coming on Monday with about 3,000 contracts going up on Monday. Actually looks like similar paper to the 1250s on Monday, Nick. So I wonder if there was a vertical going up that day. I'll have to dig in and see a little bit of opening on both days, also opening for similar amounts. So I don't know. My spidey sense, Nick, is telling me those two trades are related, but I'll have to dig in a little bit. Maybe a 12 quarter, 12 half vertical going up out here in the crude this week. 6,200 total on the 12 quarter strike. Then you got the puts coming in pretty much with a tie for number 3, the 1,200 and the 1190 puts, both doing about 5,500 contracts this week. The 1,200 puts doing a lot today, over half of that volume, 2,800 and change coming today, with the rest of the week kind of anemic. So today, people piling into some puts. The 1190 puts, though, were actually lion's share going up on Wednesday, about 3,200, about 2,400 of that opening on Wednesday as well. The rest of the week kind of light. Again, total volume about the same, about 5,500, but different days lighting it up out there, which is a little bit interesting. The rest of the week, the rest of the months had some interesting action, but that's where the lion's share of the activity was. Nick, I turn to you as always for all things quick skew. We know the calls have kind of been where the action has been of late. From a volatility skew perspective, we see the skew creeping up again this week as well. Was that all call driven, or is there something else at work out there in the quick skew this week? And what else caught your attention out there in the big gold options this week?
Well, one thing, as we discussed before, was taking a look at the June and the December contracts too. And if you go out and look and see that there's a fair amount of open interest out there as well. There weren't such great increases from a percentage standpoint, but there were some trades that caught my eye in terms of the higher strike. So we saw some openings in the 1,300 calls in both the June and the December contracts. So a little longer term, maybe a little bit more bullish play from an option standpoint. As far as the skew goes, right now it looks like a lot of this is being driven by a little bit of both, right? So we had a little bit of a drop off in the put value and a little bit of a bid in the call value. So not a great deal. Now, again, we got to remember, when we're looking at the quick skew, we're looking as a percent of a percent. So right now the calls are about 5% rich and the puts are about right at the money in terms of volatility levels. So when we look at our regular skew, you're going to see, you see on the report, you're getting about 3/4 of a vol rich on the calls to the puts, and the reality is they're pretty flat to at the money. So basically, you're looking at sort of a belly from the 25 delta to the 25 delta. So you can hold a lot of water in that vol curve right now, and it's not swishing around all that much. So again, I think it's as much as we're up this week, I think we're still sort of in a little bit of a pattern here as far as it goes, and generally speaking, you're gonna see that when we haven't seen any big moves to one way or another on the gold skew, but we have seen them happen. So I think if we get a continued rally, I think what we're gonna have to do is we're gonna have to push 1250 probably at this point. Like you said, when you had that, we saw that vertical that went up. I think if we continue to see a rally here, you're gonna see some bid in the calls, and if you go look at the ratios on the volume as well as the open interest, it is biased towards a call. So I think people are sort of thinking that we're at generally around a bottom, and we talked about that in weeks prior, how we thought that we were pretty low in the range for the price itself. So we should, my expectation again, if we're bouncing around and there's not much trade, vol's not going to see much in terms of getting bid up. We're at lows across the board here for an extended period of time. So, it's one of those watch and waits. But if you're looking for, you can look for a sit around trade. Maybe you can sell the straddle and buy the 25 delta strangle, and you're not gonna. There's not too much that you're gonna get beat up on there, because you're getting pretty much a flat vol for the wings, and you're selling the straddle, same levels. And if you do get a move one way or another, you're going to get a bid towards those strikes where you're going to move. So, again, it's something to watch. Trending markets eventually lead to opportunities. We'll keep looking at this quick skew to see if it's creeping up and give us an indication of what's going to happen, or we'll see if next week, if we trend, if it goes back down again, then we're going to have another conversation about it.
Speaking of conversations, you guys have been asking us about some products, so I think we'll take a segue now, a sojourn, Nick, into the futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, like the man said, now's the time for you guys to hit us up with your questions, your comments. A lot of you have done just that. If you do want to hit us up, you got a little bit of time left. If you want to squeeze one into the show, we'll see if we can squeeze you in. We got a lot to get to. Hit us up via the chat if you're there, or via Twitter or Facebook or something else, and hopefully one of us here will see it before the show is done. Meanwhile, we got, well, first off, before we get to one of the products you guys are asking about, we talking about gold, Nick. And we got at Quagmires on Twitter saying that the price leads the sentiment. That was in regards to us pretty much saying, the big rally out there in the future. Surprise, surprise. There was a lot of call action as a result. I don't think it takes a genius to put kind of those two things together. And it looks like at Quagmires agrees there that at the end of the day, the futures are rallying. Everybody's suddenly bullish out there in gold. Gold's a weird one, though, Nick. I know you've probably seen this, too, where it's kind of like, I kind of liken it to Apple back in the heyday a few years back, where you had to be bullish on it. If you talked anything bad about Apple, anything negative, disparaging, people came at you. People were bidding up the call skew all day long. We still see a lot of that in gold, where the gold bugs, they will not be deterred. And God forbid you disparage gold in any way, shape, or form, because you will hear about it. There's still a hardcore gold crew out there that love their gold. But yeah, I agree with you. The price does drive the sentiment, and this week that certainly was the case. All right, next up, JVIL. He wants to know product we haven't talked about in a while here, Nick, so we're going to do it on the fly. You guys can follow along, listeners, cmegroup.com/Twio. Do it live on the fly, just like we're going to do now. He wants to know, can he get an update on corn? Well, we haven't talked corn in a while, so let's do it. I just pulled it up here on the old Twio page, listeners, and actually an interesting week out here for corn. Overall open interest lighting it up nearly about a little over 9% this week, so a decent spike in volume that represents about 83,000 contracts. Corn is always one of the more active out there in the ags complex. I knew a lot of guys back a few years back when volatility was hard to find in the equity space. They went out there and dove into the corn options. It was one of the few places where you actually could see some activity across the months and some volatility. And corn still does a fair amount of paper, even these days. The futures up, looks like about 5 handles or so this week. So a pretty decent week, about 2%. About 0.5% out there in good old net on the futures land. And where we're looking out here in terms of the hot strikes out here, it was the puts. So the 350 puts that were leading the charge and doing it by a mile, Nick. They were lighting it up pretty much all week, doing a total of 46,000 contracts this week, with the hot spots being Thursday, about 17,000 contracts going up, and Monday with about 14,000. Now, interestingly enough, a good chunk of those, over 6,000, were opening on Monday, and a little over 7,000 were closing on Thursday. So maybe our friend piling into those puts on Monday and then taking his losses or his wins off the table perhaps on Thursday the rest of the week. Actually a pretty decent chunk on Tuesday as well, about 10,000. So a pretty active week overall, Nick, for the March 350 puts out here in corn. Number 2, also the puts. So even though the futures were up, it was all puts all the time this week. 33, nearly 34,000 of the 360 puts, also lighting it up to the tune of, this one though was all dominated by Thursday, 17,000 and change going up on Thursday, about 6,600 of that opening. The rest of the week much lighter, 5,000 on Wednesday, 5,000 on Monday. So a big clip going up, about half or so going up on Thursday, and then you kind of fall off off a bit again, but still puts leading the charge, Nick. Number 3, the 350, the 3 double puts, 27,000 and change of those going up. And again, Monday, so maybe a 360, 355 vertical went up on Thursday, because similar paper going up on both days. One was closing though, so maybe he was rolling. About 18,000 going up on those 355 puts on Thursday. Then it kind of falls off a bit. You get to the calls, 370. So it kind of was all puts all the time this week, and also about nearly 60% of the paper going up out there in the March. So in the front month, corn, at least so far this month, being a very, very front month this week, I should say, being a very front month driven product. Got a little bit of movement out in the skew there as well, Mr. Nick. So what's catching your eye out there in the quick skew, as well as maybe anything else that's catching your eye out there in the green stuff, in the corn this week?
Yeah, so I'm just looking at our quick skew charts while we're talking, and really what we're seeing in the front contract, we're seeing how we're pushing towards the at the money. So for the last, the front contract's going to act a little differently, right, than we're going to see the other contracts. But right now we see a little bit of richness in the call, and about a flat value on the put to the at the money. So there's not much interesting there from a recent chart activity, but if you go back and look at that from a historical standpoint, we saw the call was much richer to the at the money than a few months back. But for the last couple, and from the beginning of the year anyway, we haven't seen much. We've seen a pretty flat relationship from the 25 delta to the 25 delta call to the 25 delta put. If we go out a little bit further and look at the April contract, the April contract's not going to be that exciting because it's just rolled on, so there's not much there from a historical perspective. But if we look at the May, we're going to see that again the call is rich to the at the money, but we're talking. We're talking here. We're looking at it from a percentage standpoint. So it's 10% rich, which is about 2 volatility points, and that's been trending pretty steadily for the last month or so. But what we notice is the put has kind of caught up to the at the money in terms of volatility. So what was tilted down from the at the money to the put, we're seeing a little bit flatter. So maybe a little bit more put buying coming in, and the calls have remained steady to a little bit bid in relationship. So. If you get a chance to, I know we got a question coming up about the quick skew, and we'll do what we can in terms of getting some of that information out there. But right now, if we're looking at it just from a numeric standpoint, we see a little bit better bid in the calls, and that bid gets much stronger as you go out on the curve, and it's remained out there, and it's been pretty wide, that gap, for an extended period of time. So if we look at December, which is the crop delivery month, then that's still quite bid in comparison. But again, when you're looking at this, when you're looking at it from a skew standpoint, purely percentage, it's a 3 percentage point different. But when you're looking at it from a quick skew standpoint, it starts not to look as expensive as other products are. So that's something that we could talk about in the next user or listener question.
We're getting to that. Before we get to that, I love it. The listeners are taking us all over the product range today. And Nick, we're going back now to WTI. Alan Mayne wants to know, what's it going to take to bump WTI volatility back into the 2016 range? So now I have to go all the way back, Nick, back into the energy section, a quick try, get into this, now go into the vol tools section, and you guys can do some of that too yourself if you're logged in there, and check out exactly what we're going to parse here next, looking at the volatility skew and the term structure here over time. But it's an interesting question, Nick. You can parse WTI vol a lot of different ways. One of the easiest ways for a lot of people to do that is just to look at OIV. That's the VIX that the CME puts out there with SIBO in partnership with them, and kind of measures the implied volatility, like your normal VIX, but doing it for WTI. And that had a range of, it would seem to have a lower floor, I should say, really, of about 35, mid-30s or so throughout most of 2016. And for the bulk of 2016 was substantially higher. And right now, as we're talking, it's shy of 30. So we're seeing, it means effectively front month implied vol in WTI is at a lower range. And I kind of agree here with Alan. It's kind of a bit of a new vol. It seems like new vol paradigm. A lot of this seems to be the result of what happened. I forgot if it was you, Nick, or someone else on this show recently who referred to that as the OPEC Thanksgiving massacre, when and they came in and they pumped up WTI, and of course, as a result of all that rally, they crushed the volatility, and really that's what moved us into this new volatility era that we're in WTI right now. And that was a result of, as we said many times in the show last year, looking at the volatility skew and the term structure out there for WTI. The puts had all the bids. The calls were pretty much dead money from a vol perspective. So when you rally up the skew chart as hard as we did after that OPEC meeting, guess what? You're going to see vol come off quite a bit. Now, the second part of that, though, which has been kind of interesting, is we've seen vol catch a little bit of a bid in the calls as a result. And so now the calls nowhere near as cheap as they once were. Another development of kind of moving up the skew chart as much. Some of the bulls come back and they start buying these calls that were kind of sitting there just eroding for the better part of 2016. Now, looking here long term all the way out to the end of the year and beyond, we see that still long term the premium is in the puts, so going all the way down south of the 40 handle into the high 30s and mid 30s in the put strikes. We're seeing people paying impressive premiums for those. There still is some long-term concern about whether this impasse, this freeze, this cut in production is actually going to happen, is actually going to materialize. I believe when Blue was on from CME, Nick, a couple of shows back, he expressed his own doubts about whether that would actually materialize, and it seems like the market has a similar viewpoint. But the calls are a little bit bid too. So getting back to what Alan was saying here, Nick, and then I'll give you your chance to weigh in. It seems like we're going to take a little bit of a shock to the system in one direction or the other. Obviously, a protracted, prolonged sell-off will definitely jar us back into a higher volatility regime because long term, that's where the vol really is. It's still in the puts. But if we see an aggressive near-term rally, Nick, in WTI, maybe through the 60 handle, I think we could see a nice little pop in vol as well because near-term, those calls have some life to them. So that could be a little bit of a take. Do you agree with that, or are you going to take a complete point-counterpoint? We're going to have a nice debate here. What are you feeling here, Nick?
No, I think what I've noticed, and again, I'm trying to keep an eye where I can, especially come Monday, and then sort of see how the market progresses throughout the week. But it appears that initial increases in the underlying cause the volatility to get a little bit bid up, and then until when that doesn't become realized, then they start to beat the volatility up again. As you see, if you're looking at the report, we're in 2.25, 1.25, 1, and then 0.5% in the first four contracts, which is where a lot of the action is taking place. So. Like we've been saying, again, I think it's a good idea to go look and take a look at the open interest on those contracts as well. Right now, our range is about the 50 to 60. So, and we've been trading, 53, 54, 55. We've gotten maybe close to that, but we haven't really pushed it so much. So, depending on the time of the week and what kind of news is out there, if we start to trade to the 55, I think you're going to see a little bit of a bid involved. But that's not going to, like Mark said, I don't think it's going to get any kind of kick in the pants until we start seeing another handle, right? So another handle will be the 6 for the 60, or if we break back down below, I think that we'll start to see maybe a little bit of bid if we get below 52 or 51.5 or something like that. I haven't really looked at the chart so much, but we're gonna trade this sideways pattern, and until there's either I'll call it good in quotes, until there's some good news for the market, meaning good bearish news or good bullish news, I don't know that we're going to see any pickup in the volatility. I don't think the skew is going to change so much right away unless we do get a sustained rally. And what you might see is the put skew get bid against the call skew if we sort of, it's probably the wrong way to say it, I was going to say trickle up because you can't really trickle up, but if we creep up in price, then you might see the calls get beat up a little bit, thinking that it's a short-lived rally. But if we do get a good move, if we got, what is 1% move is about 60 cents, right? So or 55 cents, whatever. So if we got like a 2.5 or 3% move in one day, I think we might see a little bit of a bid. And if we got that sustained over the course of a few days, I think that's only when we're going to see anything, because until we get out of this, we're seeing the same thing in gold. You could say the same thing in corn too. You could, and the same thing with the crude. We're kind of trending sideways, and until we really make a difference there in terms of a direction, I don't think we're going to see too much going on.
It's going to take a little bit of a shock to the system in either direction. I'm with you. A nice little upside move could do it. Certainly a protracted downside move would definitely do it. So it's kind of a pick your poison there, obviously, which way you're leaning, which way you'd prefer. But I think either way could give us a nice little bump in vol, more so to the downside than to the upside. But a nice little sharp upside move could give us a little bit of vol love, too. And if you're a premium buyer right now, maybe you're kind of attracted by crude. Just again, bear in mind what we're talking about here with the skew and where the bids still are. Calls not as cheap as they used to be, so verticals out there at the money to the ups, out of the money call verticals not as attractive as they were, let's say, a few months ago. And the puts still pricey, although not as pricey as they used to be. So perhaps those bullish risk reversals also not as attractive. Puts cheaper, calls more expensive. Both sides of that risk reversal coming in a little bit, so not as attractive as they once were. So bear that in mind when you're sizing up your strategies, but overall still vol fairly cheap out there. So bear that in mind when you're looking at your WTI and your crude strat. And a lot of the analysis we're talking about now, like you guys also writing about USO and stuff, a lot of this will apply to USO as well. We don't break it down a lot on the show, but you can use a similar thought process looking at the skew out there. They tend to line up pretty well out there. All right, looking, what else we got next? Oh, we got, I don't even know what this handle is, Taloka4. Let's just call him T-Lock. T-Lock wants to know, how do I find the quick skew setting on QuickStrike? I checked the cmegroup.com/Tweo page, and I can't find it. Am I on the right page? Well, he's going to the page we send him to, Nick, which is kind of, we should probably explain a little bit. That's kind of the page we look at, the page we do the show from, which is kind of the week that was, exactly what the name is. This week in futures options, that's exactly what that page shows you. It shows you the week that was in your chosen product, crude, gold, whatever, and it breaks it down by gold, by everything else. You can see the skew in there, which will give you kind of some of that movement we're talking about. But again, that's kind of the net skew number, and Nick and I have mentioned before how net skew isn't really the best way to see what's going on. You got to kind of dig in a little bit, and that's where the quick skew comes. And correct me if I'm wrong, Nick, but that's one of the things you got to log into QuickStrike to get, because that's actually a pretty powerful tool. Am I correct there?
Well, as it stands right now, it's behind the subscription. But I think what we've been discussing, both Mark and I and then the guys back at the office, about opening up the links on the Tweo report, but for the first contract. So this way you get a little bit of a taste of what's available from the kind of things that Mark and I are talking about. And since that first contract tends to be the conversation point for most of the show, we're probably going to end up doing that. But what we can do in the interim, and in all likelihood, there's going to be some changes to a few things. We're always trying to tweak it to make it a little bit more useful, a little bit more informational. But if we can squeeze in the volatility section, we'll put how we represent the quick skew numbers. So typically it goes something like this. So if you'll see when you look and you go out there and you see like a 2 capital C and a -1 and a 1 small p, that would mean the calls are 2% rich to the at the money and the puts are 1% cheap, because the capital means rich and the lowercase means cheap. So that'll be the number we put out there. But this is something that we've been sort of just kind of keeping behind the lock and key until we're comfortable with it, until the data is cleaned up. That's part of the reason it's been behind, because there are, when you're doing constant maturity, quick skew, you occasionally, depending on what expirations you're using, you get a little dirty data. So we want to make sure that nothing looks too goofy when we actually get it out there to the public. But I'll say on the show that we'll look to open up some of the links on that first expiration, and we'll look to at a minimum get you the quick skew numbers that we're referencing, and then from there you can at least you'll have a weekly historical of what those have been, so you can start to get an idea of how that thing's moving.
All right, Mr. Nick, that music means we've come to the end of another interesting journey through the world of futures options. Touched on, that touchstone in the markets right now, which is, of course, WTI-Brent, and all things going on Trump-related out there. Whether you're pro or con, doesn't matter. He's moving that spread, and that's worthy of note in and of itself. Also, WTI, another hot week out there for all things crude, even though the underlying not hugest week for that. I don't know when WTI is going to fade off the front page here, Nick, but for the time being, it seems like it is taking up a lot of the oxygen in the room. Even still, we also got back into gold. Haven't done a deep dive into gold in a while, but of course that big rally out there and all you guys loving yourselves some gold. We got to touch on that a little bit as well. And of course, your questions take us into some fun places like corn. Haven't visited corn in a long time on the show, so that was kind of nice to have a surprise product visit from corn. And corn's still surprisingly active. So if you're interested in ags, and a lot of you guys listen to this show and you're primarily maybe in the crude or the metals, you haven't really flirted with ags, maybe it's time to take a look and look at some of those Tweo reports for yourself and see what the action is out there, and maybe maybe start dipping your toes in those ag waters. Also talks about quick skew and what the heck it's going to take, Nick, to really budge WTI vol. That should be an interesting thing to see. Of course, you can find all this stuff, like I mentioned, from our friends over there at cmegroup.com/TWIO to access a lot of this data. And maybe someday soon, the quick skew, even though I think that's a pretty cool tool, worthy of logging in for if you haven't done so already. Speaking of logging in, Mr. Nick, if the folks listening here, if they log into Quick Strike these days, what can they expect coming down the pike in the coming days and weeks?
Okay, that's good. I think I mentioned last week that we'd have some new stuff or some new look of things. So what we're trying to do for the people who are Quick Vol subscribers, some of that is available in the subscription version, and then there's a Quick Volatility standalone tool that will just get you access to the historical data. But we clean that up and trying to consolidate so it just really becomes a more locked-in tool. So look for that. You can go out there and take a look. That build will be out there this weekend. And then there's some more good stuff out there with the S&P 500 sector futures. So you'll be able to go and look at the total cost analysis against the ETFs starting this weekend on the CME Group website. And then keep an eye on some reports that'll make it easier for you to find expiration information, expiration calendars, that type of thing. And, I'll keep you posted. New stuff's coming, so keep listening.
There you go, listeners. And on behalf of Nick and our friends over at CME, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show. And of course, for sending in such great questions. Keep them coming. And we'll see you next week for more of This Week in Futures Options.
This Week in Futures Options is brought to you by Quick Strike, options pricing and analysis software. Quick Strike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. Quick Strike has you covered, with market data reports ranging from open interest to the term structure of volatility. Quick Strike is the perfect addition to your trading toolkit. Learn more about Quick Strike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.